Traders, in this video we're going to talk about price action rules. They're going to help us identify directional bias of the market and where are the high probability setups. As price action traders, we are mainly followers of pure price action, and using these rules we can follow the intentions of all market participants and we're able to predict where we can enter. So what is the main structure? Well, we started with nice bullish trend, the spike in the channel pattern, which means we are only focusing on long opportunities. That's how we're going to make the most money, following the main trend. We had an overshoot that can generate correction in the opposite direction. We pushed above EMA, you're still thinking about buying because we need to get new high tested. There also were two great setups, but they happen exactly around the market open, which means you don't really want to take a setup exactly at the open. There can be spike in volatility. New high was tested, which means uptrend played out. But now I need a little bit more information to work with because there can be either bearish reversal or potential correction phase. And I need to know what the next structure is. Remember, I'm a follower. I'm not trying to predict exactly what's going to happen. So I'm just going to follow price action diligently. You have a decent downtrend, but still quite small. So let's see what's going to happen. And we push back above EMA. So this is not good for the reversal. I have to redraw short term. Uptrend, we have a second entry short, but it's above EMA. Uptrend is in play. I need push below EMA in potential lower high confirmation setup. You felt second entry short, but I can't go long because the downtrend doesn't have a clear break in extreme. And market continues to work higher, which means that the new market cycle is not reversal that was negated here. It's going to be correction phase, consolidation, because you have flat EMA, you have consistent pricings up and down, and you have push above EMA. So this is what told me, okay, I need to draw these key levels because I'm right now navigating consolidation. So I have to follow the short-term trend lines, something like this. We're already at the top of the trend range, can't go long, can't really go short, uptrend in play. We have massive spike down, interesting, so it's acting exactly as the trend range as you would expect. You have a small break, push to a new extreme, interesting, and we have a second entry long. And this is interesting because we have a spike down, break, push to a new extreme. Now, to my liking, this is still too steep. There can be easily case made for wider downtrend, but more advanced trader can consider because according to range rules, you want to buy low, sell high, and we trade it up into this consolidation. So you can see price action is telling you everything. We're following it. You're able to predict consolidation. I like broader break before I'm going to start buying, but more advanced trader can consider you're quite far away from the EMA, so we're going to pull back. Price action is correcting. Now we have felt second entry short, but we broke back below EMA. This is not good. Felt second entry short above EMA would be good. It is also an inside bar, so no go. But the push below EMA is not good. Still worked, but we have to be careful. Break a new high. I don't think we can sell lower high because it's just too congested. Flat EMA, too sideways, no real bias. Just gotta be careful. This is mainly an area of development here because I need something tangible. I need some proven structure. It looks like the trend range is going to hold. We may have reversal, but we reverse all the way back down here. In hindsight, I can see nice key level here, triple top, but you can't really sell at the time because what if the trend range is going to hold and you're going to reverse back to the resistance? So yes, in hindsight, it looks like a nice short, but I can't really mark it. And notice what happened here. This is important. Market moves in pairs of twos. We have one leg down. I'm gonna copy it. Second leg down. This is the measured move. When the two legs are so clean and measured, for the significant first push, you can see this is the measured move to the tick. Brought to like a pullback. We also have one leg up, second leg up here. So there's a two-legged pullback inside the two-legged pullback. Why is this so important? Well, number one, trend range rules say that you want to fade the breakout. You trade it up into this, and broader these two legs are, the more it negates any wider downtrend like this. So this really looks like spike down, broad break, which is what we like. Broader it is, this is better. For the bulls, it means more depletion. Second, deep spike down. So this is a fell breakout, and this is a high-low confirmation setup. This is a great high probability setup because you're so far from the EMA. Yes, you're below EMA, but it's good because you're so far from it. EMA acts as a magnet. You have the measured move. You're following the fell breakout. This is a great high probability setup, a little bit more advanced, but great high probability setup. You're so far from the EMA. You know, you can also consider the failed second entry short here, but closer to the EMA you're getting, the more iffy it gets. You want to buy either super far from the EMA to capture the distance that you're going to pull back, or you want to buy for second entry short above EMA. You generally don't like buying right into the EMA, kind of halfway there, so a little bit more aggressive. And market is trending higher, so I have to redraw brand new uptrend. And notice what happened. Okay, as a price action trader inside this consolidation, I'm trying to follow short-term trends. So this most recent trend is getting my attention because it is very clean push back into trend range. And I'm thinking about second entry long. Why am I thinking about second entry long? Because this uptrend is new high and you're back above the trend range. Look at this juicy bearish bar. They must have trapped a lot of sellers, but they don't realize that you're back in the trend range and uptrend is new high, okay? There's a little difference if, for example, EMA acts as a resistance and you're below it, or this support will transform into resistance, then short setups may be more enticing. But it's not acting that way because you broke back above it and the support keeps acting as a support. EMA acts as a support. So I follow the trend line rule and I want to see new high. We had brought to like a pullback. So back into trend range, 2 key entry points, and you have a great second entry long. Once again, spike down, very broad break, second spike down. The broader it is, the more it negates any wider channel like this. You can see this is not healthy. This cannot be a pattern. The bigger this is, the more it negates the second entry long. I mean, the more it negates, there's going to be a failed second entry long. So this is a great high probability setup. You may want to consider limit order because the single bar is quite big. I dropped limit order 1 point bet. You can go 1.5 points. You don't want to be too greedy because at this point, you're just basically risking that the market is going to go. Remember, if it's a winning trade, which it's supposed to be, you need to enter reasonably. You cannot have a limit order all the way down here because at that point, why the market is correcting that much? You expect market to correct a little bit and then go higher, or either just rocket higher. Either way, it gave you some opportunity with the limit order. Great setup, second entry long, uptrend is new high. New high was made and uptrend played out. So uptrend played out. I have another second entry long. I cannot take it. Uptrend just played out with the break in new high. We're not pattern traders. We have to follow the rules. Don't get lulled by following your mental demons because this is just impulsive trade. Second entry long after new high is not a high probability setup. Okay, I have to draw a brand new downtrend. At the same time, I can't really sell. We came after full breakout. I don't want to sell right into these lows. This is mainly an area of development because we're just going sideways up and down. There is no good pattern. I don't really know exactly what's happening here. So, and it's okay. I need more information from the market. I can see 2 legs down again, 1 leg down, a break, second leg down, push higher. So this is interesting. I can see some minor resistance, but not as important. I have to redraw the uptrend once again, short-term uptrend like this. We have a new low, first entry short, pullback, second entry short failure. So this right here is a failed second entry short, a little bit early to my liking. We broke the EMA, but now you have a second entry long. It looks like repeat pattern of what happened here. Uptrend is new high, second entry long, you're back above EMA once again. So many sellers must have gotten trapped here. Spike up. The support, the main one, is holding. You know, this is a decent second entry long, almost green. I'm gonna mark it a little bit more advanced, almost green, because you're in the middle of this weird neutral bias. This is not the easiest structure to navigate, but uptrend is new high, you're coming off the support. It is a second entry long, continuation of the failed second entry short. This failed second entry short wasn't even stopped. So definitely decent setup, borderline green to be taken. Uptrend is new high was made, and now I have to pause again to go long. At the same time, I'm not a big fan of selling because I don't like these small consolidations part, the main one. The main trend range is the important one. Sometimes the market may go a little bit sideways before the bigger pattern, a new pattern is going to be established. So I don't like fading the extremes of this small one because these are not as reliable. There can be just some part of bigger structure or this market is just developing. So I'm not thinking about selling just yet. Market is working here. At the same time, I cannot go long. Gonna redraw the uptrend in retrospect. Break a new high. Spike down. You can treat it as a failed second entry long, but of course you cannot sell far from the EMA and an inside bar. So we definitely cannot sell inside bar. It's not even at the EMA. But I like resetting the count because we're going sideways, and this is really where the spike down started. So this is really the first leg. So we actually have a failed second entry long here, and also made a new low first entry short, second entry short. It's quite tempting setup because I was really expecting market to reverse now. Uptrend played out. We are close to resistance from the main trading range. It is a double hyper out this setup, so you can consider the single bar is a little bit big again, so you can consider limit order. You also don't have much room before these lows, so limit order is really preferred. It still works for a scalp, and let's see what's gonna happen. And we reverse all the way up here eventually out the scalp, and this was pivotal. What happened here completely changed the game and gave you all the information you need, because you can see how you have series of high lows, higher highs, and you keep working higher. If the trend range is gonna hold and I can reliably sell, we're supposed to have reversal from here all the way down here. Why we have minute two-legged pullback and a brand new massive push phase? Something is too bullish, okay? It's clearly not acting as a trend range at all, especially if we're gonna zoom out. It's just going higher. So what happened here allowed me to draw now this bigger channel, and I can now trust it with confidence that this channel is solid. We're going higher, we're going higher. So the channel makes sense. Can I get a second entry long? No pullback here, market keeps working higher. I can also draw it a little bit differently because this is the support and this is a little bit steeper, a little bit better. It represents the structure better. There's not too much of empty room, and it looks like this is the place where the option started. If you have second entry long here, you can consider. I noticed that some tick charts can have it. So we're doing great second entry long. Market keeps going higher, but we have overshoot. Even if I run a little bit, you still have what looks like overshoot, kind of like depletion at the top of the move, big bullish bars at the top of the move. It looks like overshoot. It's too risky for me to draw it like this simply because no confirmations at all. None. So I like keeping this as an overshoot. It makes more sense. You can see how structured it is, and you just overshot it. So we can have stronger correction in the opposite direction. Overshoot can generate stronger pullback in the opposite direction. And after overshoot, you have to skip the very first second entry long. There is not even trigger here, so no problem. But you cannot get trapped taking second entry long after overshoot at the EMA. You need more confirmation, or you need to be patient that there is going to be some correction. There was no good setup anyway, no trigger here, so no problem. But had there been textbook setup, you still can't take it. Market is working low, so due to overshoot, I'm going to redraw. Why did not? I'm just patient. I'm not really buying. Tempting failed second entry short, but double bar entry is not enough after overshoot. What if there's going to be second leg down? I just have to be patient. This was a weak option. This is not a strong option by any means. We were part of a consolidation the entire day. Okay, so that's the difference. This is not a strong trending market where you're buying any pullback. Overshoots, I still gotta be careful. And now we have it. 2 legs down. Downtrend played out with the break and pushed to a new extreme. So now, after overshoot, I still can't really buy the key level even though it worked. I want to see high low above EMA or failed second entry short. We push lower. Am I too worried? Not really. Uptrend still needs to get new high following the trend line rule. I still want to go long. I just need to be a little bit more patient, and it's okay. That can happen after overshoot. You never know how long the pullback after overshoot is going to be. So if you're a beginner trader, it can be a little bit frustrating to be waiting here, but it's just simply what happens when market is overbought for a brief moment and is out of balance. It needs to go back into equilibrium, break the trend line, and then you can expect new high. So I still don't really want to go long below EMA. We're finally pushing above EMA, and now we have high-low confirmation setup. High-low confirmation setup. We had sort of like a small triple test. We expect new high to be tested, and this is solid high probability setup because now the push above EMA is the resumption of the fact that the new high is going to be tested. Felt second entry short would have been better, but it didn't form here, no nothing, so I can't take it. Market keeps working higher. I can redraw secondary supportive channel. Do we have new high? We don't. Still room to go, so I expect second entry long. New high here, first entry long. Second entry long triggered above this bar, but of course I cannot go long above bearish inside bar. So technically we get a second entry long here, but I can't take it here, of course. This is terrible. Maybe if it triggers here, but no trigger. No trigger, so I still can't enter. Now we're below EMA, push above. And now we have a high low again, but it's simply too late. I can mark it educational wise, but it's too late. I can't enter. But you're back above EMA, you need to get new high. New high was made, uptrend played out, market is about to close. So this is the overall structure for today. Spike up into consolidation, spike up, and a brand new uptrend working higher. So this is how we use price action rules to help us follow price action and predict where are the high probability setups. I hope you had a good trading. I'm going to wrap it up, and I'm going to talk to you next time. Good luck in your trading.